Good morning, Michael, and many thanks for joining us from Washington, D.C. We are honored to have you address our Auctus Metal Portfolios clients today and talk about the silver story in 2023 and beyond. If I may start by asking you to share with us a little bit more about the Silver Institute, its mission, and your role as executive director.
Sure. First of all, thank you for this great opportunity. I know it's late there, it's early here, so I'm just pleased that we're able to address your clients and all of your associates. So the Silver Institute is over 50 years old. It started in 1971. At the time, it was more of a information output group, talking about coins and brazing and other components of silver, especially its use in photography. But it's developed over the years to what it is today, which is a market development association. And our members are the leading mining companies, refiners, end users, wholesalers of silver-backed products. And when you look at our materials that we produce, including the World Silver Survey, our supporters grow to banks and so forth. So it truly is a worldwide association with programs in China, India, Mexico, Peru, all with one goal in mind, and that is to spread the word of silver to as wide an audience as possible. Hopefully, at the end of the day, creating more demand for the white metal.
Brilliant. Thank you so much for that. Let me jump into a few questions, if I may.
Sure.
The Silver Institute's 2023 Annual World Silver Survey highlighted that silver saw its most significant market deficit on record, hitting 237.7 million ounces, and that the deficits in 2021 and 2022 more than offset the cumulative surpluses of the previous 11 years. What are your forecasts for silver demand and supply in 2023 and over the medium term?
Sure. So I'm only going to be looking out to this year, if I may. But we do believe it's going to be another solid year of silver demand. Industrial fabrication should hit a new peak high. And that'll be boosted, of course, by growth in PV installations and then healthy offtake from other industrial segments. We do believe the bar and coin demand, as well as jewelry fabrication, are going to fall slightly, but that's coming off last year's exceptional numbers. They both will remain historically high. Supply, by contrast, is expected to achieve only low single-digit gains. So as a result, this year we expect to see another 142 or a deficit of about 142 million ounces, which is shy of the 200 plus million ounces we saw last year, but still historically high and leading into a third year of annual deficits.
Excellent, excellent. We understand that the Silver Institute is a marketing association that doesn't provide price forecasts. However, leading and reputable analysts are forecasting anywhere between 25 and 45 US dollars an ounce in 2023. What are your thoughts on these forecasts?
Yeah, look, I mean, the LBMA at their meeting in Barcelona last year convened a survey of 30 analysts from across the world. I think their average price this year, if I'm not mistaken, was $23.65 for a forecast, with a low of $14.70 and a high of $35. Now, that was back in October of last year, so things have certainly changed. So we think that in the short term, these economic certainties will remain high. And although it appears that there's a deal with the debt negotiations in the US Congress with respect to the debt limit, that's not been done. The legislation has not been passed and it's not been signed. We still have an ongoing US bank crisis. They should continue to support investments in precious metals and certain investments against systemic risks. The group that prepares our World Silver Survey for us, Metals Focus, feels that this will not develop into a full banking crisis. We do believe, and they, as do they, that the U.S. debt situation will be resolved. But we also believe that there'll be continued interest in purchasing precious metals and silver as a safe haven. That may lose some momentum as the year goes on. But we're still faced with persistent high inflation, a very tight labor market, and the scope for the Fed to adopt a looser monetary policy, meaning maybe not raising or even decreasing the rate, is probably not on the table at this point in 2023 or 2, 3, 4 months down the road. So as these interest rates continue to rise or remain stable, the dollar will begin and continue to recover, adding further downward pressure on metals prices. So Metals Focus says that they believe that there'll be a peak of about $27, $28 this year, and that the average price will be around $23.30. I'm a little more optimistic at the Silver Institute. I'm looking at 25, 26 as an average price for 2023.
Excellent, thank you. What do you believe to be the main drivers that will continue to push silver prices upwards moving forwards? And what part will the continuing green energy transition, solar power, and the evolution of electric vehicles play?
Well, I think that's going to play a rather big role. I mean, look at, we're seeing nationwide, regional, and local mandates on green technologies. Silver plays a huge role, as you know, in solar photovoltaic use. And we believe that number is going to continue to grow through the year. We also believe that silver plays a role in the electrification of vehicles. Not so much in the battery, of course, but in the contacts, all the instruments that make the car operate. And as EV share, the share of EVs begins to and continues to grow across the world, that's a win-win for silver. We're putting out a report later on this year on looking at silver's role not only in PV and EV, which also will include autonomous driving, but also in wind power and nuclear power as well, because there is a silver component to those two power generation sources, and we want to get our handle on the main four, at least, of renewable energy. So we think that's going to play a role. Now, look at last year, the story was India, okay? They saw an amazing demand increase with respect to investment, with respect to jewelry, silverware, and they even had a small tick up in their industrial growth. So India was the story in 2022. And we can talk a little bit later about coins and bars and institutional investment.
Yeah, indeed. It was a record year in 2022 for investment demand for silver, and it was driven in large part by India, which saw demand increase by a staggering 188%. Does the market outlook for investment demand for silver continue to look robust?
Yeah, we do believe on the physical investment side that there will be a small drop off from what we saw the record numbers of last year. We think that in the United States, it's remained particularly strong. And that's been characterized by the historically high premiums on these coins, on these bars that these dealers are putting on the end consumer. And it's just simply a demand issue. Now, Germany, for example, which is one of the third largest market for silver investment, is suffering from a newly imposed VAT tax. And that is somewhat restricting investment into silver and gold. Or let me leave gold off, at least silver from what I know, with the VAT tax. So we're having a little bit of an issue over there. But high local metal prices and the stubbornly high inflation has weighed on investment in Europe for both gold and silver. However, that being said, it's the institutional investment which needs to step up to the plate in order to get this price higher. The retail level is fine.
Brilliant. Considering the reshoring of infrastructure commitments that governments have married themselves to with regards to decarbonization of energy production, the falling silver production in Mexico, as well as deglobalization, increasing geopolitical tensions and polarization, what does your analysis point to with regards to a significant global recession hitting us in the latter part of 2023 and the possible impact on silver's global supply-demand picture?
Yeah, that's a great question. You know, we think the impact of a global economic downturn will be limited on silver's key demand areas. So in terms of industrial applications for silver, which is, as you know, over half of silver fabrication demand, we have seen industrial demand outperform global GDP growth over the last couple of years. And that includes even the COVID and related disruptions on the supply chains. Silver applications still at that time managed to achieve all-time highs, 2021, 2022, and we expect another all-time high for 2023. So that says a lot about the metal. It says a lot about the fact that it is being included in so many applications. You only have to go back 15 years ago when silver's use in photography began to die, let's put it that way, given the fact of the impact on personal use of cameras, on cell phones, and the impact of digital technology. But the fact of the matter is there are other uses for silver, and engineers and inventors continue, manufacturers, to use silver in these products. So, you know, we also have to look at the supply side. So you mentioned Peru, you mentioned Mexico. Yes, there are geopolitical issues. There are a few mines in the pipeline which are set to reopen this year. That's why we think there'll be a small impact on a growth in mine supply. But we don't think economic factors played a huge role in these mines. It was mostly geopolitical. And we think that there will be another deficit in 2023 of about 142 million ounces, as I mentioned earlier.
Right. Ever since silver attempted to break through $30 an ounce in 2021, it has, much to the frustration of investors, essentially trended downwards or sideways ever since. Do you think silver is fairly valued at the current levels?
Yeah, you know, silver's dual role as both a precious metal and an industrial metal makes it somewhat difficult to decide its real fair value. And this has really been the case since the pandemic, when high macroeconomic and geopolitical uncertainties saw the prices benefit more from its precious metals attributes. Now, silver's inability to hold above 30 may disappoint some tactical investors. They tend to focus on the short-term price movements. However, interest in silver among investors with longer-term investment horizon, with a longer-term investment horizon, remains positive. Last year, we had a record year for silver bar and coin sales, as I mentioned. ETPs, even with weaker prices, the scale of profit taken has remained limited. Those that invest in silver exchange traded products are stickier than other metal investors. They tend to hold it for a longer period of time. So another factor that we have to consider here is that the majority of silver comes to the market as a byproduct from other mining activities. So whether it be lead, zinc, copper, or gold, that can sort of adjust the cost curve analysis for silver primary mines. So that tells a partial picture, which makes it sort of somewhat difficult to decide a fair value for the silver price. But I can tell you this: the calls that we get, the letters that we get, the emails that we get, the interest in silver as an investment remains strong. On our webpage, our silver investment section is the most clicked on link on our webpage. Silver investment, interest in silver is very, very strong.
Okay, great. With inflation rapidly rising, many investors believe silver to be a strong inflation hedge. We, however, believe silver serves more as a crisis hedge. What are your thoughts on this?
Well, I think you're right. I mean, we agree that silver is viewed as a hedge against certain systemic risks, and that's why it somewhat explains why silver investment picks up when there's a financial or economic crisis. Um, Over the last couple of years, silver prices responded positively to the pandemic, to the Russian-Ukraine war, and the banking crisis in March of this year. The fact that silver has sort of found support at the plus 23 level reflects the still high level of economic uncertainty, which continues to favor safe haven assets, including precious metals. In terms of its appeal as an inflation hedge, it may appear somewhat counterintuitive that silver's lower price performance this year, especially when inflation hit multi-decade highs in many countries, was apparent, and it's sort of a lot of analysts, were somewhat befuddled by its performance so far to date. But this really reflected the aggressive rate hikes by central banks, and not only raised the opportunity cost of carrying silver, but it also weighed on medium to long-term inflation expectations. For example, despite stubbornly high inflation, 5-year and 10-year inflation expectations remain modest in the year through last year. So look, there's a lot of factors. Silver also tends to follow the gold price. Even though gold hit an all-time high this year, silver is struggling to get above $27 an ounce. So it's when the institutional investors and the retail investors align and begin to push that price up.
Yeah, and on that point, I mean, gold hit its all-time high in US dollar terms this month, whereas silver is still trading at just less than half of its all-time high. I mean, silver obviously has a long way to catch up. Is there a known lag effect between a price rise in gold and a subsequent rise in the price of silver?
Well, I'm not aware of an established structural lag. Okay, I mean, the current supply and demand setup will serve as a foundation for the silver price, but that may not be the factor that drives outperformance. Instead, in our opinion, gold's price ability to continue past its recent breach of the 2000 mark will be a more significant determinant of silver's outperformance this year. So gold and silver's storied companionship has been one of a strong correlation throughout the last few decades, as you know, whereas reaction to economic conditions has produced a unified price response from both the yellow and white metals. Silver, as you know as well, is not the dominant monetary metal. Banks are not holding and storing, or I should say central governments are not holding and storing silver as they do gold. So we feel the following. The commitments to the green energy transition has served as a key battleground for silver industrial demand. In the event of a recession, it must be noted that the extent of silver industrial demand could be compromised, right? I mean, manufacturers may slow down, economies could slow down. And I just had an opportunity last week to look at the recently released In Gold We Trust report from Incrementum. They talk about the functions of silver as a principal structural driver for the silver price. So that includes lower supply, increased physical demand from the monetary level, as well as the commitments of governments and individuals to a green energy transition. And that in turn will support the silver price, not only this year, but as we move forward.
Thanks for that, Michael. Before we conclude, I'd like to ask our founding partner, David Mitchell, if he has any comments or questions for you. David.
Thank you, Robbie.
Hello, Michael. Thanks very much for joining us today. Very kind.
Hi, Dave.
Obviously, just going over the key points, we're facing a global Western, and to be honest with you, a global political lead for a merriment to decarbonisation of energy production and the electrification thereof. And then obviously overlay that with geopolitical tensions and hence the onshoring of infrastructure build. So, very much led by Goldman Sachs and many other independent analytical groups that are looking at a global commodity super cycle. And we would suggest that probably one of the leaders of the global commodity super cycle over this next 5 to 8 year period is going to be led by precious metals, because they tend to lead, especially when you have geopolitical tensions arising, which obviously we very, very much have, and leading economic indicators that are incredibly bearish at the moment for the global economy. So we as a group are very bullish silver, but obviously, as you can imagine, the likes of yourself, the Silver Institute, are bringing out papers demonstrating global supply-demand deficits in silver, progressive over the last number of years as well. And with the geopolitical tensions and the global inflation, the onshoring of infrastructure builds, and yet the silver price lags. Incredibly frustrating for investors of silver. From my perspective, looking at historical parameters and historical markets, which very much I tend to concentrate on, you tend to get a great big push in the last, let's say, 20% of the cycle, where reality catches up. And I think that's what we face with silver at the moment. I know the likes of Bank of America and various other institutions are looking towards $30 silver this year, and probably an attack of higher levels next year. But that's where that's how I'm focused, and
Sure.
and the onshoring of consistent infrastructure build out. So would you agree with that?
I do. I completely agree with that. And I think that as we progress through the year, we think that the silver price has more structural benefits built into it than it does at present today as we speak. So, for example, you spoke of the green infrastructure investments. You spoke of the supply-demand deficit. I think that's going to start weighing in on the institutional investors. A lot of the trading, as you well know, is algo derived. It is electronic trading. Once the price hits a certain mark, the selling begins. That's not just true for silver, it's also true for other commodities. I think that the Silver Institute and our members have begun to tell a story this year with respect to the green energy transition and silver, and get it included into these conversations on a global scale, that it's not just cobalt or copper or lithium, it's silver. I had a quote earlier this year where I said, if copper is the superhighway to decarbonization, then silver is the glue. Okay, it's silver that really paves the way and leads to the fact that to make these applications work properly and make them reliable. I mean, for years, if you take solar panels, for example, engineers and manufacturers have been successful in somewhat lowering the amount of silver content in these panels, and they do it for a price perspective. Okay, when silver was reaching $30 an ounce in 2020, panic mode set in. So they have been able to decrease the silver holding loadings somewhat, but the growth in installations, however, has outpaced the reduction of silver content. So we're expecting this year, for example, about a 22 million ounce increase in silver in that one particular application to above 160 million ounces. We believe by 2025 that silver's use in the entire automotive complex will be around 90 million ounces of silver a year. So this is clearly a win-win for our metal.
Yes, I've been lucky enough to speak to several engineers of some of the largest industrial groups that have been very much moving in the solar panel industry. And yes, there was a massive deloading of silver concentrate within the panels, but actually the new technologies, the fifth, sixth generation solar panels, are talking about a complete reversal of that, and actually a higher loading purely because of the economic output increases rather dramatically.
Yeah, David, you're absolutely right. I mean, look, when you're putting these installations in the ground, you're looking at a 20-year commitment before a change out. And with respect to the other metals that they're considering or using, there's no better conductor of electricity. We can't change than silver. Okay, so silver is a predominant force. It will, by and large, be the predominant force in solar panel technology. And you also mentioned that there are other manufacturers that are looking to increase the level of silver in these solar panel modules because they're looking for the long-term reliability and stability.
Yeah, and the economic output, of course.
Right.
The overlay that we tend to approach these markets at the moment is obviously the global debt crisis. Governments have married themselves to ever expanding deficits forever and a day, but obviously with higher yields, that's beginning to break the system. We effectively cannot grow our way out of this global debt crisis, and we can't default on it because we don't know where those dominoes fall in a defaulting situation, especially considering the globe is so complex and so integrated. So we face a global monetary debasement, financial repression. And that's another reason, never mind from the commodity super cycle and the industrial aspect of silver and the qualities of silver, but from a monetary debasement. I don't think that gets mentioned enough. This is going to be very prevalent, especially youngsters like our good selves who are walking into that baby boomer retirement. And that's going to put a lot of pressure on this, the support of the global debt crisis.
Well, you look at it this way. If you look at it this way, I should say, I do expect there'll be some pushback on Capitol Hill on this package, which was released, I believe, on Saturday night. The deal between House Republicans and, or I should say, the Speaker of the House and the President of the United States. We're already seeing a lot of pushback from certain quadrants of the Republican Party. I don't think this is going to sail through on the first ballot. I think there'll be some friction. I think there will be some grandstanding. I think at the end of the day, obviously, it'll be great for the markets. It'll be great for investors. It'll be great for individuals if a deal gets done. But let's look at the long-term ramifications. What the deal essentially says is that you can pretty much spend at will until January 1 of 2025. There may not be another crisis until then. So you're looking at roughly a year and a half of unencumbered spending by a White House at this point that tends to favor more spending than actual cutting. So that could have a very significant impact on interest rates, on the amount of money an individual carries on a credit card, the amount of debt. I think most consumers who do carry a balance on a credit card have seen their minimum monthly payments increase some point rather extensively, even today. So this is going to have an impact. It could have an impact on the labor market. And I'm talking about if this deal goes through, and I think it will eventually. And it needs to get done by June 5, according to the U.S. Treasury Secretary. So we shall see. But I read that in the United States alone, that if you amortize the debt per individual, the individual debt just based on our nationwide debt is over $150,000 per individual. And I think that's a lot of debt. And I think that that's going to be a significant story going forward. And I think precious metals, including silver, will play a role as a hard asset against these economic risks.
Exactly. To weather the storm.
Exactly.
Thank you, Mike. I really appreciate you coming on, and we'll end it there. But again,
Okay.
thanks, and thanks for everyone for coming.
Yes, thank you.
Thanks to you and your team. I really appreciate the opportunity. Robbie, David, thank you.
Yeah, thank you, Michael. Your invaluable insights into the world of silver, absolutely brilliant. It's been most informative and thoroughly appreciated. I do encourage all of our Auctus Metal Portfolios clients to follow the publications released by the Silver Institute via silverinstitute.org. And in the meantime, once again, a very big thank you for you and your time. And we look forward to speaking with you again later in the year. Have a great day.
I do too. Thank you all. Thank you to everyone. I
Michael.
appreciate it.
Thank you.
Cheers.